Yes. In previous lecture, we have discussed about how to audit account receivable debtors. And we have also discussed about how to audit accounts payables mean creditors. How we can verify debtors? How we can verify debtors? By verifying financial statement assertions relating to debtors. What were the assertions? Valuation, completeness, rights and obligations, existence. How we can verify valuation? We need to inspect the age analysis copy of management to ensure whether they have created provision for doubtful debts properly or not. And we need to inspect cash receipt in post year end period to see whether cash has been received against debtors. Because if after year cash hasn't been received, this means debtor is either fictitious or it is bad. For completeness, we need to make sure all the documents are relevant there, from sale order toward dispatch note to invoices, and invoices towards entries into the receivables and sales ledger. For ownership, we have discussed we need to perform independent confirmation from debtors. That independent confirmation from debtor is also called circularization. Independent confirmation from debtor is also called circularization. We perform circularization, i.e., independent confirmation from debtor regarding the balance, whether they agree with the balance or not. What is this circularization? What is the procedures to perform circularization? Why we need to perform circularization? What are the situations where we cannot perform circularization? We're going to discuss. So what is circularization? Circularization is obtaining independent confirmation from the customer about the balance. And it is a reliable source of evidence because it is external rather than internal. So circularization means confirming balances from the customer independently, and it is a reliable source of evidence because it is external evidence. But before sending a request to the customer for the balance, before confirming the balance from the customer, we need to obtain client permission. How we can confirm from customer? Either through email, either through letter, either through phone call. From where we get those information about customer? From client data. So if we are confirming any customer of our audit client, before confirming, we need to take a client permission. If client giving us permission, we can confirm balance from customer. And if client not allowing us, they are not permitting us to contact their customer, this means there is some issue. Or might be sometimes client reject confirming their customer, might be it will upset their customer. Like if auditor is asking about the balance, might be there is a serious problem with the company. It can upset the customer of our client company. So due to that reason, our client sometimes reject confirming balance from their customer. Or sometimes we unable to perform circularization. Why? Might be customer is a foreign customer. And to confirm the balance from foreign customer will require some additional cost. And due to that heavy cost, we are unable to confirm balance. Or we send a confirmation letter to customer, but he didn't reply. And if he didn't reply, this means balance is not confirmed from the customer. And if we are unable to confirm balance from the customer, either client doesn't allow us permission, or due to some restriction like a cost restriction, we didn't perform the confirmation, or we send the letter or email, but the customer didn't reply. This means balance is not confirmed from the customer. In that case, we need to confirm receivable balance through alternative procedures. What could be the alternative procedures? We need to check occurrence of receivable. How? The way we check occurrence of sales. How we can check occurrence of sales? By tracing sales ledger balances to invoices, invoices to dispatch note to invoices. So in the similar manner, we will confirm the receivable. We will trace a sample of receivable ledger balances to relevant invoices, and from invoices to dispatch note to order. So circularization not performed. Why not performed? Because the client is saying it will upset my customers. Our customers are global, mean foreign, it require cost. Our client doesn't allow us permission. So debtor unlikely to reply, or if we send the confirmation, but customer didn't reply us, this means in that case, confirmation is not done. Means circularization is not performed. Balance in dispute where confirmation request may prejudice negotiation, might be there are some sale return that has not been cleared. That's why customer will not agree with the balance. So where circularization is not performed, we need to verify receivables through alternative procedures. What are the alternative procedures? We need to check whether the recorded balance is supported by invoices, dispatch note, entries into stock record, mean PIR, and there is original order from the customer. And we need to make sure cash has been received from the customer in subsequent period, mean post year end period. So what is circularization? It's independent confirmation of balance from the customer. It is a reliable source of evidence because we are obtaining external evidence. But to confirm balance from the receivables, we need client permission. And if circularization is not performed, then what we need to do? In that case, we need to verify receivables through alternative procedures. But we need to perform circularization must where client system and controls are weak, where there is a chance of a fraud, where the records is not available for verifying through matching the records. I mean, if clients records are not available, like there are no sale invoices, no dispatch notes, no sale order that we can compare with each other and verify. If records are not available, in that case, we can verify receivables through confirmation order. So where we should perform receivables confirmation compulsory, where there is a weak control system, where there are chances of fraud, and where records are not available to perform alternative procedure to verify receivables. What is the procedures for circularization? In how we can perform circularization? Before performing circularization, mean confirming balance from the customer, we need to reconcile receivable ledger with the control account. Just to make sure the balance we are going to confirm is accurate, mean there is no posting error in that balance. If the balance we are taking from ledger is inaccurate due to posting error, obviously customer will not confirm with that balance. So we need to make sure the balance we are going to confirm from customer is accurate. How we can verify? By comparing receivable ledger with control account to identify any posting error. And then if suppose company is having 100 different customers, so we will take a sample of receivables. We will not confirm all. We will take a sample of receivables. I suppose out of 100, we have taken sample of 20. We will obtain detail of those customers like their phone number, their email ID, their address, etc. We will decide method of circularization. Mean what could be our method of circularization? And there are two methods of circularization. One is called negative method and other is called positive method. Negative method means reply only if you do not agree with the balance. Mean we will send a balance to the customer. You owe this balance to this client company, ABC company. Reply only if you do not agree with the balance. If they do not reply, what we will assume they agree with the balance. But might be customer don't bother to reply you. In that case, you are considering he is agreeing with the balance. No, you should perform circulation through positive method. What is the positive method? Reply either you agree or do not agree. Reply either you agree or do not agree. So there are two methods of performing circularization, confirming balance. Negative method, reply only if you do not agree with the balance. And if customer not replying to our request, this means we are considering he is agreeing with the balance. But this is not a good method because might be customer don't bother to reply. He's having no connection with you. Why he should reply you? But you are considering, oh, if he doesn't reply, this means he's agreeing with the balance. So what is the best method? Positive method. Mean we should ask the customer to reply either he agree or do not agree. But in some situation, we can adopt a negative method where where client control system is strong, we should move for negative confirmation, negative method. And where the receivable balance is immaterial, we have verified receivables through alternative procedures, and we are just performing this procedure for extra evidence. In that case, we can perform negative confirmation. But we should go for positive confirmation where the balance requested is material and balance is not verified by other procedures and client control system is weak. In that case, we need to perform positive confirmation, positive method of circulation. So where we should perform negative method of confirmation, where control system is strong, balance is immaterial, and we have verified the balance through alternative procedures. Where we should move for positive methods of confirmation, where control system is weak, where balance is highly material, and where alternative procedure verification is not possible. What is the negative method? Reply only if you do not agree. Reply only if you do not agree. Mean in case of no reply, we will consider customer is agreeing with the balance. What is positive method? Reply either you agree or do not agree. Mean both cases you have to reply must. So what we need to do? First, we need to reconcile receivable ledger with control account to make sure the balance we are going to confirm is accurate in client record. We need to select a sample of receivables. We need to check detail of those customers. We need to decide on method either positive or negative, and then we need to choose a medium how we should confirm balance either through email, either through fax, either through letter, either through phone call, how we should confirm, mean what should be the medium of confirmation. And if suppose customer not agreeing with the balance, we need to consider might be there are some item in transit. It might be there are some sale return or cash in transit. Or we need to consider indication of disputed sales. Or there could be a chances of a fraud, might be sales or receivable balance is fictitious or overstated. But in case customer do not agree with the balance, what we need to consider? Either there are any item in transit, we need to check that. Either there are chances of disputed sales, that's why customer not agreeing with the balance. Or if both things are not there, this means there is a chance of fraud, mean receivables are overstated. If customer not replying to your request, send a second request. And if even customer do not reply on second request, then we need to check receivables through alternative procedures. What are the alternative procedures? Checking occurrence of receivables in sales system and checking cash has been received in post year end period. And we need to analyze the result and record everything in working paper. So what is the process or procedures for debtor circularization? First, we need to reconcile receivable ledger with control account. We need to choose a sample of receivable, check their detail from client records, decide positive or negative method, decide the medium to confirm. And if a reply do not agree with the balance, we need to consider either item in transit, either disputed sale or indication of fraud. If there are no replies, we need to send a second confirmation. And even on second confirmation, there is no reply, we need to verify through alternative procedures. And we need to analyze the result and record everything in our working paper. So examiner could ask what is the process of circularization, what is the difference between positive and negative method of circularization, why we need to perform circularization, why we are unable to perform circularization. If we are unable to perform circularization, how we can verify, I mean, what are the alternative procedures to verify a receivable? So we have discussed how to audit sales. We have discussed how to audit purchases. We have discussed how to audit wages. We have discussed how to audit receivables. We have discussed how to audit payables. Let's discuss how to audit inventory, means stock. Inventory, where it appears in the financial statement. Balance sheet under current assets, also called stock. At the same figure, closing inventory is deducted from cost of sale in profit and loss account as well. But mainly it is a balance sheet item in asset. Closing inventory. This means it is a balance sheet item. This means for balance sheet item, we need to verify the assertion's evaluation, completeness, rights and obligation mean ownership, existence, and presentation and disclosure. What company management try to do? They will overstate inventory or understate inventory. Overstate. This means we need to verify inventory is not overstated. We need to verify inventory is completely recorded. We need to verify the inventory recorded is owned by the company and that inventory actually exists. This means when we are going to perform audit of inventory, we need to perform two types of verification. One is verification of physical quantity and other is verification of value. Verification of quantity and verification of value. How we can verify physical quantity? For verifying physical quantity, we need to ask the client, please perform inventory count. Where? At year end. Because the inventory going to appear in the financial statement is the figure of inventory that is in client company at final day of year end, mean 31st December, if year end is 31st December. So we need to request the client, please count the inventory on 31st December, final day of year end. We will attend that inventory count. We will check whether that inventory quantity is available in client warehouse. That is verification of physical quantity. If that quantity is available in warehouse, through this, we will be able to verify three assertions. Inventory actually exists, mean existence. If exists in client warehouse, this means client owned the inventory. And if the inventory in record is similar to physical inventory, this means inventory is completely recorded. So through physical count, means physical quantity verification, we can verify three assertions: existence, ownership, and completeness. And for valuation of inventory, we need to verify the valuation. How we can verify the valuation? We need to see whether per IAS2 inventory is recorded lower of cost and NRV. What is NRV? Net realizable value. What is a net realizable value? Selling price less cost to sell. This means we need to verify cost first through accounting records. We need to verify NRV, means selling price cost to sell. We will calculate both figures and see what is the lower, whether inventory is recorded valued on a lower figure or not. Mean to verify inventory, we need to perform two verification of physical quantity, and this will assure the assertion existence, ownership, and completeness. And we need to verify the value for valuation assertions. And through this, we will be able to verify four main assertions relating to inventory. Now we need to discuss in detail how we can verify physical quantity and how we can verify value. Okay, let's discuss few things. Where inventory should be counted? At year end. We should request the client, please count your inventory at year end. Suppose year end is 31st December 2023. And after inventory count, mean they need to count the inventory, and against count, they need to adjust PIR. Mean if inventory count showing there are 900 units, while in PIR it's showing 930 units. They need to adjust PIR with 900 units. For remaining 30, they have to book a loss. Because what companies are doing, they are stating inventory balance from where? Directly from the PIR. That's why we need to make sure the balance going from PIR to balance sheet is accurate or not. How? We will ask the client to count the inventory, and those count sheets must be compared with PIR. If a PIR and count sheets are having a different balance, they need to adjust PIR. The main purpose of physical count is to update the PIR. There is no other purpose of physical count. Only one purpose, they need to adjust or update the PIR. The inventory control we discussed in sale and purchase system, PIR must be updated against physical count. So what is the main purpose of count? We need to see whether we are having a same number of units physically that are available in PIR, mean record of inventory. What is PIR? Inventory record.
But if the client is recording the inventory If they're doing the fraud, then do the fraud again. Because if they're already.
We will check how we can trace the fraud. So there are two ways how company record their inventory balance in financial statements. One way is that at year end they perform count. How many units are there in warehouse? They value those units and stated the balance in the balance sheet. The other way, they are simply copy pasting the balance from PIR to the balance sheet. The best, they should perform a count and then value inventory and state the balance in balance sheet. But PIR balance is also acceptable if client control system is strong. Meaning if on monthly basis they are performing a count and updating PIR and now at year end they are copy pasting PIR balance to balance sheet, that is also acceptable. But if their control system is weak, then balance from PIR to the balance sheet is not acceptable. In that case, count balance putting into the balance sheet is acceptable. But we need to request the client perform physical count at year end. And after physical count, you need to adjust the PIR because the main purpose of physical count is to adjust the PIR. Sometime client request us this 31st December is our Christmas week because to count the inventory, this means you need to spare your staff for counting. During count, you need to close the warehouse. If suppose 31st December is their Christmas busy week, especially for the grocery store company, so they might request us, please, we can perform count either 2 weeks before year end or after year end. If client requesting, please perform count other than year end, we can accept if client management integrity is honest. I mean, there is no doubt on management integrity. Control system is strong and there are no chances of fraud. In that case, we can accept a client request. Then we can perform count either 2 weeks before year end. Mean we can perform count at suppose 15th of December 2023. What we will do at 15th December 2023, the inventory should be counted and against account PIR must be updated. And we need to make sure the inventory movement from this count date to year end is completely accurately recorded. This means the balance from PIR going into the balance sheet will be accurate. So if sometimes client request the year end is our busy day, we cannot spare staff, we cannot close our warehouse, you can perform count, we can perform count either before year end. So we can accept this request in what situation? Where control system is strong, chances of frauds are less, and client integrity is not doubtful. So at the date of count, we need to perform count against count. PIR must be updated because there is no other purpose of count. One purpose of count is to adjust PIR. If PIR is not adjusted, count is meaningless. And we need to make sure the inventory movement from year end to count date is completely accurately recorded. If client request, we can conduct a count after year end. Or might be our auditor appointment is after year end, we were not available at year end. Then in that case, how we can verify the inventory? If our appointment is after year end, our client request, we can perform count after year end. What we need to do, we need to count the inventory at that date. Against count, we need to adjust PIR. And the inventory movement from year end to this count date what inventory has been added, we need to subtract, and what inventory has been subtracted, we need to add. And then we can verify the year-end inventory. If count is performed after year-end, what we need to do? Against count, we need to adjust the PIR. And we need to make sure the inventory that has been added should be subtracted, and the inventory that is subtracted should be added. And this test is called rollback test. And through this rollback test, we can verify year-end inventory. And if count is performed before year-end, we need to make sure against count PIR is adjusted, and the inventory movement from count date to year-end date is completely accurately recorded. Inventory movement completely and accurately recorded. Where we need to perform rollback test if count is performed after year end. So against count, we need to make sure PIR is adjusted, and we need to perform rollback test from count date till year end date. Mean what inventory is subtracted means sold should be added, and what inventory is added mean purchased or produced should be subtracted, so that we can verify year end inventory. Again, let's discuss these things. Okay. The entity may ascertain quantities of stock at year end either by performing a full physical count, mean they perform count, they value the inventory counted and then stated balance in the balance sheet, or extracting balance from the stock record, mean PIR. Simply they are checking what is the balance in PIR, they are stating into the balance sheet. The latter is acceptable, mean extracting balance from PIR is acceptable to the auditor if stock has been physically counted during the year through cyclical count, mean continuous on monthly basis, and the results compared with the record and in discrepancies being investigated and adjusted, thus giving confidence in the competence of accuracy of those records. Mean if inventory controls are strong during the year, we can even satisfy ourselves on copying the balance from PIR to the balance sheet. What is best? Balance should be based on physical count. So when inventory is material to the financial statement, the auditor must obtain sufficient appropriate audit evidence regarding its existence and condition by attending the physical inventory count. I mean, if inventory is material to the financial statements, we must form the physical count. Perform audit procedures over companies' final inventory record to determine whether they accurately reflect actual inventory count sheets. We need to make sure against count sheets, PIR is updated. If the count is conducted at a date other than financial statement date, mean either before year end or after year end, the auditor should obtain evidence about whether changes in inventory between the count date and the financial statements date are properly recorded. Mean if a count has been performed before year end, we need to make sure inventory movement between count date and year end is completely accurately recorded. If the auditor is unable to attend inventory count, mean he was not there, his appointment after the year end, the auditor must attend inventory count on the alternative date and perform test of intervening transaction called rollback test. Mean added should be subtracted and the deducted inventory should be added to the records. If inventory is held by a third party, like if client inventory is not in their warehouse, they have stored the inventory into any storage house. So we should obtain a certificate from that third party, like this client, how many units they are having in their store. because might be that storage house don't allow us to move over there and count the inventory. So if the inventory is held by third party and is material, the auditor should obtain certificate from third party confirming the quantities and condition of inventory, are arranged to inspect the inventory, or arrange for another auditor to inspect the inventory. Mean ask their auditor, okay, you can confirm the inventory count and give us a report. Or we need to take certificate from the third party, like they are having this many units of our current inventory. So how we can verify physical quantity? To verify physical quantity, we need to perform some procedure in 3 different phases. We need to perform some procedures before the inventory count date. We need to perform some procedures during the inventory count. And we need to perform some procedures after the count. So before count, we need to perform some procedures. During a count, we need to perform some procedures. And after count, we need to perform some procedures. What are the procedures before count? What are the procedures during the count? What are the procedure after count that we need to learn? But before moving to the procedures of before count, after count, during count, let's discuss how inventory count should be done. Mean what is the proper method of count? Mean how count should be done. Who will count the inventory? Auditor or client? Client. So what is the proper method of inventory count? Mean what are the inventory count instructions that should be followed during count? For inventory count, there should be a inventory count controller. Mean there should be a supervisor who will make sure inventory count is going to be happen properly. So there should be a person called inventory count controller. And that inventory count controller should be an independent person. He should be independent, mean he should not be warehouse staff. So for inventory count, there should be a inventory count controller who will control the counting team, who will make sure count is conducted properly, who will be responsible for the inventory count. And then for counting, there should be a team of 2 persons. One person will count and the other will record onto the sheets. And these persons should be independent. They should not be storekeeper or warehouse staff. If warehouse staff is involved in inventory count, what will happen? If suppose they have counted some units of inventory as 10, and they know 2 we used for our personal use, but they will write on the sheets 12. If the staff is not independent, then personal use of inventory by warehouse staff will not be identified properly. They will write according to their usage, not the actual quantity. That's why team of 2 persons should be there, and the counting team should be independent. They should not be store staff. They should not be warehouse staff. For counting, you need to divide the warehouse into different sections. And if you are having different types of inventory, all types of inventory should be divided into different sections so that staff can trace inventory easily and count easily. If all the inventory is there combined, then staff will find it difficult to trace what kind of inventory is that, especially when the inventory is packed into the boxes. So you need to divide the warehouse into sections. And the staff should be aware about the method of measurement, mean how they should measure the inventory. Either they should measure the inventory in numbers, in kgs, in liters, or in dozens. Method of count should be specified. method of measurement should be specified. In how they should measure the inventory, either in numbers, either in liters, especially if company is having inventory of oil, especially for the petrol station, either in liters, either in kgs. Gas reserves could be measured in kgs, or either they should measure in dozens, especially eggs can be measured in dozens. And for counting, the pre-printed, pre-numbered sheets should be given to the staff without quantities. You should give sheets, pre-printed sheets to the staff, and sheets should be stating the name of inventory. So that after counting each type of inventory, staff should mention the number over there. If numbers are already over there, suppose one inventory showing 50 units, what staff will do, they will just check whether 50 units are on the floor or not. If suppose on the floor there are 60 units, they will not be finding the other units. They will not try to find other units. So that's why number should not be mentioned, only the name of inventory should be mentioned on the pre-printed sheets. And these sheets should be pre-numbered as well. Pre-numbered means there should be sequence-wise number on the sheets as well. Why? Suppose you have given 10 sheets to 5 different teams, 2 sheets each team. And after count, the count team has returned 9 sheets, 1 sheet is missing. If there are no pre-numbered, can you identify which sheet is missing? Which team has been handed over that sheet? If they are pre-numbered, you can identify which number sheet is missing and from whom it is missing. So pre-printed, pre-numbered sheets should be issued to the staff without quantities. Quantities should be mentioned after count. Otherwise, extra unit on the floor will not be verified. And during a count, inventory movement should be stopped. Mean warehouse should be closed down. There shouldn't be any inventory in out during count. Otherwise, you will not be able to verify which inventory have been counted and which is not counted. So inventory movement should be stopped during count. And which inventory has been counted, it should be marked properly. Either through paint, either through pen, it should be marked properly, because if it is not marked, inventory could be double counted or could be missed from the count. So which inventory has been counted, it should be marked either through ink pen, through pencil. There should be mark over there, or there should be a paint mark over them, nail polish mark over them, so that you can trace whether this inventory has been counted or not. If there are no mark, there could be double count or missing count. And during count, if you are finding any inventory that is a slow moving, damaged or obsolete, that should also be separately marked. Like you suppose you have counted there are 50 units of inventory, and out of these 50, there are 6 units damaged. You should mention 6 in bracket. Why? Because the value of these 50 units is different, and these 6 damaged units is different. These 50 units are normal. Obviously, their cost will be lower. They will be valued on cost. But these damaged units, their NRV will be lower. So they should be stated on NRV basis. If they are also recorded on cost basis, so inventory could be overvalued. So during counts, slow moving, obsolete, damaged units should be separately marked. And if inventory is held by a third party, you need to identify how much inventory, how many units have been held at third party, and you need to obtain certificate from the third party. So what is the good method for inventory count? There should be inventory count controller. There should be team of two, one accounting, one recording, and a team and controller should be independent. Otherwise, misuse of inventory by warehouse staff will not be identified. You need to divide the warehouse into different sections so that team can easily trace inventory and count. The method of measurement should be specified to the team so that they should be aware how we should count the inventory. For counting, there should be pre-printed, pre-number sheets without quantities should be there. And the quantities the staff have to mark through permanent ink rather than lead pencil. Because if they are stating the units of count through lead pencils, so that can be changed afterward. So they have to mention the quantities with permanent ink on the sheet so that they cannot be altered after. And during count, inventory movement should be stopped, mean warehouse should be closed. And the inventory that has been counted should be marked so that it shouldn't be come for double counting and shouldn't be missed. We can identify which inventory has been counted and which is not counted through marking on the inventory, counted inventory. Slow moving damaged obsolete units should be separately marked. And we need to identify how many units have been held by third party. And for that, we need to obtain certificate from the third party. This is the good method for inventory count, or you can say these are the controls, mean policies that need to be followed during the count. These are the inventory controls, inventory count controls. Examiner, give us a scenario like inventory is counted in this way and ask us identify deficiencies in inventory count. Provide explanation, mean implication of that deficiency, and provide recommendation, mean controls what company need to adopt during count. Let's discuss a question.
These are also controls.
Yeah. Inventory controls. Question 172. One 62, sorry. Lily. Requirement A for 12 very good marks. For the inventory count arrangement of Lily Window Glass Company, identify and explain 6 deficiencies in where those instructions were not followed and you need to explain why, what could be the problem for the company. And provide recommendation to address each deficiency. This means we can make 2 columns, one for the deficiency and one for the recommendation. And total marks are split equally between each part, 6 for deficiencies and 6 for recommendation. It is the 1st July 20x5. Lily Window Glass Company. Lily is a glass manufacturer which operates from a large production facility. They produce glass windows, where it undertakes continuous production 24 hours a day, 7 days a week. Also on this site are 2 warehouses where the company's raw material and finished goods are stored. Lily's year end is 31st July. Lily is finalizing the arrangement for the year end inventory count, which is to be undertaken on 31st July 20x5 at year end. The finished windows are stored within 20 aisles of the first warehouse. The second warehouse is for large piles of raw materials such as sand used in the manufacture of glass. There are two warehouses, one for finished goods, one for raw material. The following arrangements have been made for the inventory count. Two warehouse managers will supervise the count as he is most familiar with the count. I mean, who is inventory count controller? Warehouse manager. So what is the deficiency? The inventory count controller mean supervisor is not independent. If he is not independent, what could be the issue? The personal use of inventory by the warehouse manager will not be identified properly. There could be chances of misstated inventory balances. So the inventory count controller, i.e. supervisor, should be independent, like company should arrange any other department manager as a supervisor of inventory count rather than warehouse manager or production manager. Is that fine? One issue, 2 marks, easy. There will be 10 teams of counters and each team will contain 2 members of staff. So that's fine. There are 10 teams and each team consists of 2 members. There should be 2 members team. One for counting, one for recording. Okay. One from the finance and one from the manufacturing department. You are taking team from finance, that's fine. But for manufacturing department, they also hold inventory, especially the raw material and working process. And any inventory lost during the manufacturing will not be highlighted properly. Might be there are working process 10 units actual, but if they lost 2 units due to their negligence, what they will write 12. So that our negligence should not be highlighted. None of the warehouse staff other than the manager will be involved in the count, but this manufacturing department are not independent. Each team will count an aisle of finished goods by counting up and then down each aisle. As this process is systematic, it is not felt that the team will need to flag areas once counted. Flag means marking of a counted inventory. If they are not marking, there could be chances of double count or missing any inventory from the count. So the inventory counted should be marked, should be flagged. Once the team has finished counting an aisle, they will hand in their sheets and be given a set for another aisle of the warehouse. In addition to the above, to assist with the inventory counting, there will be 2 teams of counters from the internal audit department, and they will perform inventory counts. Internal auditor have to observe whether controls during inventory count has been followed up properly or not. If they are also involved in count, they will not be able to monitor the inventory count process. So again, these persons are not responsible for count. If they are responsible for counting, there will be no monitoring of the counting process. So internal auditor should supervise the count. They should monitor the count, whether all the controls are followed by during count or not. They should not be involved in the count.
External auditor monitoring.
If companies are having so many areas of warehouses, in some areas we attend the count, in some area we ask the internal auditor, they can attend. For material areas, we observed by ourselves for immaterial inventory areas, we ask the internal auditor. So internal auditor shouldn't be involved in the inventory count. The count sheets are sequentially numbered, that's fine. And the product codes and description are printed on them, but no quantities, that's good. Sometimes examiner asks, find the control strength. So these are the strength. Two teams, these are the strength. There is a supervisor, this is the strength. If the counters identify any inventory which is not on their sheet, then they are to enter the item on a separate sheet which is not numbered. Obviously, if any inventory that is in the warehouse on the floor, but not on the sheets, they need to record them on separate sheet. But that separate sheet should also be pre-numbered. Meanwhile, giving sheets to the staff, you should give some pre-numbered blank sheets as well, so that they should record the inventory that is not in the system but in the warehouse on those separate sheets. If those sheets are not pre-numbered, you cannot assure whether the extra units on the floor sheets have been returned after the count or not.
Well, if they're not in the system,
There could be some there could be some inventory items.
like if you're not in the system, how are they pre-numbered?
No, no.
Serial
Pre-numbered, not pre-numbering of inventory. We are discussing about pre-numbered of inventory sheets. If we have issued 10 sheets to staff for counting, there should be number 1 of 10, 2 of 10, 3 of 10, 4 of 10, so that after count we can ensure all sheets has been returned. Because if any sheet is missing, this means count is missing. So the extra sheets should be pre-numbered so that controller can ensure, supervisor can ensure whether all sheets has been returned after the count or not. Once all counting is complete, the sequence of the sheets is checked. This is control strength. And any additional sheets are also handed in at this stage. All sheets are completed in ink. This is also control strength. Any damaged goods identified by the counter will be too heavy to move to central location. Hence, they are to be left where they are, but the counter is to make a note on the inventory sheets detailing the level of damage. So they are highlighting damage units. As really undertake continuous production, there will continue to be movement of raw material and finished goods in and out of the warehouse during the count. So inventory movement is not stopped during the count. If inventory movement is not stopped during the count, we cannot identify which unit have been counted and which unit have been missed. There will be kept to a minimum where possible. The level of work in progress in the manufacturing plant is to be assessed by the warehouse manager. If warehouse manager is assessing the level of work in progress, he might be including raw material into work in progress or finished goods into work in progress. And this could over or undervalue the inventory because the value of raw material is less, work in process value is more, and finished goods value is even more than work in process. And if a warehouse manager is identifying the value of work in progress, he could include raw material into the work in progress so that inventory should be overvalued. It is likely that this will be an immaterial balance. In addition, the raw material quantities are to be approximately by measuring the height and width of raw material piles. In the past, this task has been undertaken by the specialist, mean expert. However, the warehouse manager feels confident that he can perform this task. No, he can. over or understate the inventory value through working process. So there should be independent expert as in the past used to value the work in progress inventory. So have we identified 6 issues? Supervisor is not independent. Team is not independent. Inventory is not flagged properly. Internal auditor is involved in the inventory count. The separate sheets are not pre-numbered. Movement is not stopped during the count. And a manager, warehouse manager is assessing the value of work in progress. Mean company is not using the expert. What is the requirement B? For that, we need to discuss the other areas of inventory. So, to conduct audit of inventory, we need to perform two type of verification. One is a verification of quantity and other is verification of a value. How we can verify quantity? For verification of quantity, we need to perform some procedures before count.
If someone's asking for the link, someone in the WhatsApp is asking for the link.
Why they are asking for the link if I have sent the team link? This means they are not linked to the team. These people disturbed during the class. I need to open the WhatsApp for them. That's why remove the WhatsApp group. Oh my God, there is no group where he's asking for the link. See their seriousness of landing the lecture. Okay, to verify physical quantity of inventory, we need to perform some procedures, and there are some procedures that we need to perform before the count. There are some procedures that being an auditor, we need to perform during the count. And there are some procedures that we need to perform after the count has been completed. But we need to perform our check before count. Before count, we need to make sure our audit staff who is going to attend inventory count is familiar with the client business knowledge and the inventory. If he don't have knowledge about inventory, he will not be able to see how inventory is properly counted or not. So we need to send our staff during count to observe inventory count, who is having a familiarity, who is having a knowledge about the client business and its inventory. Otherwise, might be client is conducting some kind of a fraud in front of him, but he is unable to identify because he doesn't have knowledge about the inventory and client business operations. So first we need to make sure the competence of our staff who is going to attend the count. Then we need to review previous year working paper. Why? In previous working paper, it was written what were the problem in inventory count in last year. This means we need to keep those problems in our mind while going to attend the inventory count. So that's why we need to identify problems during inventory count in the last year, because those problems could be in the coming year as well. That's why we need to review previous year working paper for inventory count. We need to make sure where stock account will be conducted, mean location, date and time especially. Mean at what date, what time. Normally, stock movement during count, what the client do, they conduct account at night time so that they can close their warehouse. Because during, if they close warehouse, they will be affecting their sales, their business as well. So we need to make sure what is the location, date, and time of inventory count. What happened once, I was in London and I was an audit supervisor, and my manager assigned me a task to attend the inventory count of our client. Okay, I was aware about the date. Okay, the inventory count is going to be conducted on Saturday. What happened? I wake up late in the morning because I'm the auditor. So I wake up late in the morning, like 10 o'clock, had breakfast, and then there was a traveling from my home place to that client place for 1 hour. I reached about 1 o'clock at client premises. I've called their manager. I am here. I'm the auditor, and I want to attend the inventory count. They said the count has been performed at 8 o'clock in the morning. I thought they will be waiting for me. Obviously, auditor will be there. Then they will start count. No, because they don't want to disturb their business. So that's why being auditor, before count, we need to make sure at what location count will be conducted and what date and time so that we can send our audit staff on that date, time on that location. So before count, what we need to do, we need to make sure the competence of our staff who is going to attend inventory count, whether he's having familiarity, knowledge of inventory and kind business or not. We need to review previous year working paper to identify problems in previous year account so that we can keep those issues in our mind. And we need to make sure the location, date, and the time of the account. And we need to make sure materiality of stock. If suppose client stock is on 50 different locations, so we cannot verify inventory count on 50 different locations. What we can do, we will identify where material mean more inventory is there. So we can attend only those areas where material inventory is there. So we need to identify materiality of stock on different locations. If stock is having warehouses on so many locations, so that we can attend only those areas where material inventory is. Before count, we need to ask the client, what is your stock take instruction in what is your method of inventory count? We will review that method, evaluate that method, and see if that method is not appropriate. We will recommend some adjustment to the client. You should count inventory like this method rather than your own method. So before count, we should obtain and evaluate stock take instruction. Stock take instruction mean method of count. Mean what is your method of counting? We can evaluate and recommend any measures to the client. Before count, we need to make sure whether during count we need any expert or not. We are going to verify inventory of a petrol station. Where is petrol? Underground. How many petrol is there? Can we verify? No, we need to take an expert with us. he will verify whether this much inventory is underground or not. So before count, we need to make sure whether we need any expert or not. If we need any expert, obviously we need to engage him so that at the day of count, he is available. Rather than during count, oh, we realize we need expert and expert is not available and client cannot conduct account or any alternative date. This means we will not be able to verify inventory. Before count, we need to make sure whether we need to engage internal auditor for count or not. If we need to engage, we need to see whether he is reliable or not. I mean, we need to see his qualification, his independence, his objectivity, so that we can engage him during count. Especially if inventory is on different locations and all locations we cannot attend. So some location we will ask internal auditor, he will attend on behalf of us, and some location we will attend ourselves. So before count, we need to see whether we need to engage internal auditor during count or not. Before count, we need to make sure if client inventory is held by third party. So we should request the third party to provide us a certificate of the inventory. So what we need to make sure before count, we need to make sure competence of our audit staff who is going to attend inventory count. We need to review previous year working paper. We need to check location, date, time of count. We need to check materiality of inventory on different locations. We need to obtain and evaluate a stock take instruction and provide recommendation for improvements. We need to make sure the need of expert. We need to make sure the need of internal auditor during count. And we need to make sure obtaining certificate from third party if they hold client inventory. These are the procedure examiner can ask straightforward for even 5-6 marks. What are the procedure that auditor need to perform before count? Straightforward, moment, 6 marks. If you know them, you can obtain 6 marks. If you haven't learned them, obviously you will be missing easy 6 marks. Now we are moving towards procedures during a count. Being auditor, what we need to perform during a count. During count, we should attend the inventory count as a observer, as a attendant rather than as a counter. We are not going to count the inventory, we will observe. What we will observe? Whether the proper stock take instructions are followed by or not. What are the proper stock take instructions? These controls. Because if a count is not performed as per proper method of inventory count, this means count is not proper. So we need to attend inventory count as a attendant, as observer rather than counter. And we need to make sure the recommended instructions has been followed during the count. So we don't need to count the inventory, but a high value inventory we should count by ourselves on sample basis. If client inventory is suppose diamond jewelry, this is high value inventory. Even a single unit could have a big impact on the inventory. We are conducting audit of Bentley. Each car is high value. So for high value inventory, we should recount by ourselves as well during count. During count, we need to perform cutoff test. Cutoff test means to make sure against GDN, GRN's inventory movement has been recorded in correct period. Because if inventory movement is not recorded in correct period, due to this inventory balance could be misstated. During count, what we need to do, whatever we are observing during count, we need to record in working papers. We need to perform cutoff test. Cutoff test means against GDN, against GRN. We need to make sure inventory movement is recorded in correct period. Mean we will trace a sample of a GDN, GRNs raised in the last week of current period to relevant invoices, ledger balances to ensure inventory movement is recorded in current period only. And then we will trace a sample of GDN, GRNs raised in the first week of next period to relevant invoices, ledger balances to ensure inventory movement is recorded in next period only. In simple word, perform cutoff testing to ensure GDNs, GRNs have been recorded in their correct period. So what are the procedures during the count? We need to attend as a attended observer, not a counter. Make sure proper stock take instructions are followed. On sample basis, count high value inventory. Perform cutoff testing to ensure inventory movement is recorded in their correct period. And we need to record all the observation into working paper. And there are some procedures that we need to perform immediately after the count has been completed. What is the purpose of count? What is the purpose of count? To update PIR, so we need to make sure stock records are compared with the count. Mean PIR is compared with the count, and if there are any differences, that has been investigated and adjusted to the PIR. If PIR is not going to be adjusted after the count, there is no purpose of count. So after count, we need to make sure if there are any differences between count sheets and PIR, so PIR must be adjusted. We need to make sure all the sheets issued for count has been returned. Because if any sheet is missing, this means count is missing. And after count on a sample basis, we need to perform sample count from sheet to floor and floor to sheet. What is sheet to floor? We will take the counted sheets and see any of the inventory scores on the counted sheets is showing 50 units. We will count units on the floor, meaning in the warehouse, whether there are 50 units available. And this will be a test to prove existence in whether inventory mentioned on the sheets actually exist on the floor in the warehouse or not. And then on the floor, meaning the warehouse, we will count any of the inventory by ourselves. Suppose there are 30 units we have counted. Now we will see on the sheets whether the staff has shown 30 units. This is called floor to sheet. This is for completeness, whether they have recorded the number of units completely on the sheets or not. So after count, we need to make sure that all sheets have been returned. And we need to perform sample count from sheet to floor for existence and from floor to sheet for completeness. Sheet to floor mean the units mentioned on the sheets are actually available, mean actually existence. And floor to sheet mean count any of the units on the warehouse floor and then see whether the similar units have been written by the staff on the sheets after counting or not. This is for completeness of recording. And we need to make sure whether PIR has been adjusted against count sheets or not. So before count, what we need to do, we need to check the competence of our staff, review previous year working paper, check location, date, time of count, check materiality of inventory on different location, obtain and evaluate the stock take instructions, check need for expert, check need for internal auditor, and take third party certificate. During count, we need to attend as a observer, attended, not a counter. We need to make sure stock take instructions are properly followed. We need to perform sample count on high value inventory. We need to perform cutoff test to ensure inventory movement is recorded in the correct period. And we need to record all observation into working paper. You can explain these things even more during count, how we need to make sure whether inventory count controller and a team is independent or not. When we need to make sure during count, we need to make sure whether movement is stopped during count or not. We need to make sure whether counted inventory is flagged, properly marked or not. We need to make sure whether slow moving damaged units are separately marked or not. We need to make sure whether pre-printed pre-number sheets without quantities are there or not. We need to make sure whether staff writing down inventory quantity on the sheets with permanent ink or not. So through this, we can even explain more procedures default during count. And what we need to perform after count, there are only 3 procedures. Whether all sheets have been returned or not, we need to verify. On a sample basis, we need to perform sample count from sheet to floor for existence and floor to sheet for completeness. And we need to make sure PIR has been adjusted against count sheets. So this is the process to verify physical quantity of inventory. Now we are moving towards how we can verify value of inventory. How we can verify value of inventories. To verify value of inventories, we need to make sure whether inventory is recorded lower of cost and NRV per IAS2 or not. Whether inventory is recorded lower of cost and NRV or not. And for that, first we need to verify cost. Then we need to verify NRV. And then we will able to see whether inventory is recorded on this amount or this amount. In a inventory cost include cost of purchase, mean raw material invoicing cost carrying inward import duties, and cost of conversion. What is cost of conversion? Labor and overheads, especially for the work in process and finished goods. What could be the overheads? That should be part of inventory cost. Wages foreman, means supervisor wages, factory cleaning, factory rent and rates, factory light heat power, depreciation of plant and machinery used in production process, production director salaries, wages department costs that are involved in production. Admin cost, selling and distribution should not be part of a inventory cost as a overheads because these are operating expenses rather than direct expenses.
Cleaning the direct expense.
Factory cleaning, where factory cleaning mean where production is going to happen. It's not a cleaning of our sale display. That is part of production.
Yeah.
What is the net realizable value? Net realizable value mean what the company can realize from the stock in their present condition and location. Mean what the company will receive by selling this inventory. And what company will receive? Sale less cost to sell. Mean if to sell your inventory, you need to pay some commission to any broker. Without paying commission to broker, you cannot sell. So that will be called cost to sell. Mean what you are receiving after selling the inventory, that is NRV. Selling price less cost to sell. Mean what company will realize, mean will receive from present condition of the inventory.
Does cost to sell include the cost of the good, like the production cost?
No, production cost is a part of cost. Now we are discussing about NRV.
Like selling, distribution, marketing.
Mean after selling the inventory in the market, what you will receive in a net, that is NRV. Means sales less cost to sell. For normal inventory that is not out of fashion, not damaged, not repaired, their cost is lower than NRV. because NRV include profit element as well. Suppose inventory cost is 100. You have produced in 100. In how much you will sell? 100 or less than 100? Obviously more than 100. But you will receive, suppose you are receiving 120. So at what value inventory should be stated in the balance sheet? Lower. What is the lower? 100. But for damaged, obsolete, slow moving units, their cost is 100. But damaged units, you cannot sell on profit. You will try to reduce your loss. You will try to overcome this inventory. Might be you are selling on 80 or 70, especially on discounts, if it is out of fashion, obsolete, so that you can recover at least some part of the cost. So they should be stated on this amount or cost. They should be stated on NRV. For normal units, you can sell on profit. So they should be recorded in the balance sheet on cost because their cost is lower than NRV because NRV include profit element as well. But for slow moving damaged units, you should check whether NRV is lower or cost is lower. And normally for damaged units, NRV is lower, so that you should record on NRV basis. Now we are moving towards how to verify NRV of the units. First procedure, we need to identify items marked as damaged, slow moving and obsolete from where? From where you can identify how many units are damaged, obsolete, or damaged? From count sheets. So examine count sheets and identify items marked and obsolete, slow moving and obsolete. We need to verify items returned by customers. Why customers are returning? They could be damaged or faulty. We need to extract from stock records item held longer than normal time period. Why they are held longer than normal time period? Because they are slow moving or obsolete. We need to check with competitor prices, mean market prices. In at what price these damaged obsolete items are going to be sell in the market. If any of the competitor is selling its product on discount offers, which product companies sell on discount offers, new or the old one? Old one that are little bit damaged, little bit repaired, or out of fashion, mean out of date. We need to discuss with management their intention, how they can sell on offers or discount, mean at what price they can sell these products in the market. And we will compare those prices with market prices or competitor prices as well. So first we need to identify items marked as slow moving, damaged, obsolete. We need to check their competitor prices or market prices. We need to discuss with management regarding their intention to sell these items on discount offers. Through this, we will be able to identify value of those items. If suppose management is saying, okay, the cost is 100, we can sell these items on 90. But if suppose in market, those items are selling by competitor on 70, can this company sell on 90? No, their value is a 70 rather than 90. If management is saying, no, our products are in much better quality than competitor, we can sell them on 90. We will say, okay, keep it on 90. And then after year end in post balance sheet period, when those items are going to be sent, what we will do? We will inspect the invoices. by inspection of sales invoices, we will be able to understand at what selling price these items going to be sold. If they are going to be sold on 90, this means at year end inventory value of obsolete units are okay. But if after year end these inventories are going to be sold on 60, even lower than competitor prices at that time, this means inventory is overvalued. We will ask the management, please state this inventory on 60 per unit rather than 50. So for NRV, we need to check for slow moving damaged obsolete items because their NRV is normally lower than cost. For normal units, cost is lower than NRV. So if company recording them on cost, that's fine. But for slow moving damaged obsolete units, we need to check NRV. So first we need to identify items marked as slow moving obsolete damaged from count sheets. We need to check their compactor prices, i.e. market prices, in at what price other companies selling these items. We need to discuss with management their intention to sell them on discount offers, mean at what price you can sell them, so that we can check in records whether they are stated on that price or not. And we need to inspect sales invoices in post balance sheet period to determine the actual selling price. This is an example. There are three types of inventory: A, B, and C. Their cost is 100 for inventory A, and RV is 95. For inventory B, cost is 95 and RV is 100. For inventory C, cost is 90 and RV is 100. What is the total value of all these three inventory? Can you calculate? If we combine the cost of all three inventories, that is to 85. If we combine the NRV of all these three inventories, that is to 95. This means we should record them on lower value. What is lower? To 85 to 95. If we record them on to 85, this is the wrong method. For each category of inventory, we need to compare cost and NRV separately. Inventory A should be recorded on a 95. B should be recorded on a B should be recorded on a 95 because cost is lower. And C should be recorded on a 90 because cost is lower. And by adding this inventory should be recorded in the balance sheet at 280 rather than 285. Because at lower than cost and an RV, we should record the inventory. And if there are different categories of inventory, we need to compare cost and RV separately. Where inventory should be presented in the balance sheet under current asset, and company need to disclose how much value of raw material, how much value of work in process, and how much value of finished goods is in the inventory. Suppose in balance sheet you have shown inventory of 120 million, but in notes to the accounts you have to disclose out of this 120 how much is the raw material, say 40,000, how much is the work in progress, say 20,000, and how much is the finished goods, say 60,000, and all together 120,000. Let's take a break. After break, we will discuss few more things. So moving next. So we have covered receivables, substantive procedures of receivables. We have covered substantive procedures of payables. We have covered test of control, substantive procedures on sales system. We have covered test of control and substantive procedures on purchase system. We have covered the test of control and substantive procedures on wages system. We have covered test of control and substantive procedures on inventory. In these four areas are relating to test of control as well as substantive procedure. Now we are going to cover another area, non-current assets. These five areas: sale, purchase, wages, inventory, non-current assets. One of them must be tested in the exam. Either there will be a question on sale, either there will be a question on purchase, either wages, inventory, non-current asset. What kind of question? Normally weaknesses with recommendation or substantive procedure. We have covered one question, Tinkerbell on sales, a test of control. But these five areas must be tested. Along with the sales might be examiner asks a receivable. Along with purchase might be they can test payables. But these five areas, sale, purchase, wages, inventory, and non-current assets are very, very, very important. One question must be out of these five areas. So let's move towards covering non-current assets. Where it is appeared non-current assets? Under assets in balance sheet, we are going to discuss tangible non-current assets. Non-current assets are of two types, tangible and intangibles. Tangibles that we can see and touch: land and building, plant and machinery, motor vehicles, furniture and fixtures. Intangibles that we cannot see and touch: goodwill, patents, brands, copyrights, etc. So as tangible non-current assets are assets, so for asset or balance sheet item, we need to verify assertions evaluation, completeness, rights and obligation. It's not obligation to pay, it's rights and obligation. Mean ownership, and we need to verify existence. How we can verify existence of asset? Inspection. Through physical inspection, we will physically inspect the asset whether they are available or not. No asset can be overvalued. If company is not recording depreciation or not recording appropriate depreciation, how we can verify depreciation? We will recalculate depreciation using the rate and policy and compare with management calculation whether they are recording on the same amount or not. What if you're recording? We can compare with the competitor financial statements. We can consult any expert whether this asset is having this life or not. We can compare current year depreciation with the previous years, whether in the previous year similar asset lost for these years or not. If in previous year the asset was lost for 5 years and now company is depreciating on 10%, mean assuming life of 10 years, this means this is not realistic. If company is depreciating on 10% while other competitors depreciating similar asset on 20%, this means company is lowering the depreciation. If experts saying this asset life is 5 years, but company depreciating on 10% means assuming a 10% life, this depreciation is not acceptable. Or we need to inspect the purchase invoices of the asset to verify its cost as well, whether the cost is same overstated or not. How we can verify ownership of asset? To purchase document, if motor vehicles, we can check registry document, registration document. If land and building, again, registration document. You know? So what are the procedures to verify non-current assets? What are the procedures to verify non-current assets?
So each item has own verifications, like own assertions. Some are common, some are not common.
Now, for balance sheet item, we need to verify four must assertions: valuation, completeness, ownership, and existence. For each balance sheet item, we need to verify these assertions as well as presentation and disclosures.
Obligation.
Rights and obligation in ownership. If it is a liability, obligation to pay. So non-current assets, we need to verify valuation. Valuation means we need to check whether assets are not overvalued. How asset can be overvalued? If its cost has been recorded overvalued, or depreciation is not charged properly, this means we need to verify cost as well as depreciation. How we can verify cost? Inspection of purchase invoices. In at what amount company have bought, whether company is stating cost exactly that amount or not, and cash book, bank statement from where we can check whether company have paid the similar amount or not. Because invoice could be made fake. If the asset is bought 7 years ago, might be the company from which company bought the asset doesn't exist now. So we cannot confirm whether this invoice is original or fake. So we will see the cash book bank statement 7 years ago, whether it's showing same cash payment. Or we can even convert it into two procedure: inspection of purchase invoices to verify purchase cost, inspection of cash book bank statement to verify cash payment against purchases. Or we can write one procedure. How we can verify depreciation? Recalculation of depreciation using the rate and policy. Recalculation of depreciation using the rate and policy, and compare with management calculation for accuracy. Other procedure for depreciation, we can say expert independent consult independent expert regarding useful life of the asset. Compare depreciation rate policy with the comparator financial statements. Compare depreciation rate policy with the prior year financial statements. Discuss with the management regarding their estimation about useful life of the asset to see if appropriate. I mean, we can make further procedures: expert, comparator financial statements comparison, prior year financial statements comparison, and discuss with the management regarding their estimates of useful life to see if reasoning, mean their discussion showing some reasonable estimate of it. Otherwise, for 2 marks, how we can verify valuation? We can verify cost and depreciation. Now, regarding completeness assertion, how we can verify completeness? Whether asset is completely recorded or not. Every company prepare their asset register for their internal records, where they are having all the records of the asset, and this is for internal purpose. For external world, they show cost account detail. But for their internal purpose, they prepare asset register, and might be they can show wrong records to external. But for their internal purpose, they cannot prepare wrong records because there is no purpose of preparing wrong records. So what we need to do, we will compare asset register with asset cost account to see whether they are same or not. Because if they are not same, might be some entries not recorded either on register, either on cost account. So reconciliation. Reconcile asset cost account with asset register to identify any differences. Because if there is any difference, this means it is not completely recorded, could be either missing, understated. How we can verify rights and obligation mean ownership? Rights and obligation. Obligation mean might be it's leased. Invoice will tell whether you have paid us full amount or some amount still left. Rights mean companies having a right on this asset, mean possession on this asset, mean ownership of this asset, mean companies having complete right to use the asset for whatever they want. If it is not in ownership of company, companies are not having the complete right to use the asset. So how we can verify ownership? Inspection of purchase invoices for machinery, title deeds for land, building, and registry documents. To ensure owned by the company. Because having on company name, this means companies having ownership. Through invoices, if company have a paid full amount, companies having ownership. If company haven't paid full amount, this means this is leased. So need to show asset as well as liability. How we can verify existence? Physical inspection of asset and their condition. Not only we need to check whether asset exists or not, we need to verify whether their condition exists according to their value. Might be company have written 500,000 for machinery in the balance sheet, and there is a machinery of 50,000 scrap. We need to verify its condition as well, whether they exist on the value stated in the balance sheet. If the car is new, its price is much higher. Might be 80,000 dirham. If it is old, its value is about 10-15,000 dirham. If company has written on 18,000, 80,000, this means their condition doesn't exist according to the value. So these are the procedures, and please note inspection recalculation, reconcile, inspection, physical inspection mean we are using the word or procedures to collect audit evidence. So 1, 2, 3, 4, 5 procedures to verify for assertions of non-current assets. How we can verify presentation and disclosures? Check, present it under non-current assets in balance sheet. Check, must be presented comparative. And if regarding tangible non-current assets, standard require you need to provide detailed disclosure about asset cost account, about accumulated depreciation account. So we need to check disclosure of asset cost account, check disclosure of accumulated depreciation account. Regarding disclosure, if company is selling any non-current assets, this is a non-routine transaction. And if companies are having any significant gain or loss on non-routine transaction, that should be disclosed separately in the financial statements. So significant. Gain or loss on disposal of assets should be disclosed separately in financial statement. So there are 5 procedures to verify first 4 assertions and 5 procedures to verify presentation and disclosures. Can you understand this? Can we revise the accounting for non-current asset? Company need to prepare asset cost account. Company need to prepare accumulated depreciation account. Asset cost account. Opening balance is on debit side, while closing balance is on credit side. And cumulative depreciation opening balance is on credit side, while its closing balance should be on debit side. If we have bought any asset during the year, asset debit, cash credit, this means addition will be here. If we have charged any depreciation to profit and loss account during the year, where depreciation is recorded in profit and loss account as expense or income. Expense nature is debit or credit? Debit.
Yes.
What is the accounting entry for depreciation charge to the profit and loss account? Depreciation expense debit means profit and loss account debit. Accumulated depreciation account credit. This means that will be recorded on credits. Depreciation charge for the year. Is that fine? If company selling any asset during the year, we need to open a disposal account. We have studied this in financial accounting. If we are selling any asset, what we need to do, we need to record accounting entry, disposal, debit, asset, credit. This means asset will be charged to disposal. When we are selling any asset, all its accumulated depreciation should be eliminated. If accumulated depreciation is having credit nature, how we can eliminate? By debiting it. So we will record disposal here, and disposal will be credited against accumulated depreciation account. This is called elimination of depreciation on disposed asset. If we are selling any asset, the accounting entry is cash debit, disposal credit. So disposal credit against cash, this means we need to record cash here. And then what we do, we balance the disposal account. Either balancing figure will come here or here. If balancing figure coming here, that would be charged to profit and loss. This means disposal debit, profit and loss credit. What is credit in profit and loss? Income or expense? Income. This will be called gain on disposal. If balancing figure coming on the credit side, that will be called loss on disposal, charge to profit and loss count as expense debit. Is that fine? This is the counting of non-current asset. Okay. Suppose we are going to conduct audit of any client company and we need to verify non-current asset. When we are going to verify non-current assets, we need to verify 4 things regarding non-current assets. First, we need to verify the opening balances, also called brought forward balances. Mean balances coming from previous year. We need to verify them.
Part of valuation.
Mean when we are going to perform audit of non-current assets, how we perform? We need to verify opening balances. How we can verify opening balances, we're gonna discuss now. Then we need to verify addition of asset. Mean the asset added during the year we need to verify. Then we need to verify disposal of asset. Mean the asset that has been disposed, we need to verify. And then we need to verify presentation and disclosure of asset. Mean we need to verify 4 different heads relating to non-current assets opening balance, the balance coming from previous year because those are heavy amounts. Addition during the year we need to verify separate. Disposal we need to verify, and presentation and disclosure need to verify. This mean asset is verified. How we can verify presentation and disclosures? These are the procedures we have learned so far, 5 procedures. Mean check must be presented under non-current asset in the balance sheet. Check whether they are presented comparative. Check disclosure of asset cost account. Check disclosure of accumulated depreciation account. And see if there is any significant gain or loss on disposal of asset that must be disclosed separately in the financial statement. How we can verify opening balances? Balances coming from previous year. How we can verify? We can compare these opening balances with the previous year financial statements to see whether similar amounts as closing balance in previous year financial statements or not. So what we will write? Compare, verify by comparing with previous year financial statements and working paper if available. If we were the auditor in previous year, this means we had verified the previous year closing balances. So just we need to compare current year opening balances with previous year, whether they are same or not. But if we were not the auditor in previous year, then we need to verify VCRE of opening balances as well. How we can verify valuation of opening balances, inspection of purchase invoices and cash book bank statement in previous years of financial statements. Recalculation of depreciation using the rate and policy and compare with management calculation for accuracy in previous years financial statements. Completeness, reconcile asset cost count with asset register to identify any differences in previous year accounting records. Ownership inspection of purchase invoices, title deeds and registry documents in previous year accounting records. But existence, we will perform physical inspection of asset and its condition, not in previous currently. Whether the asset coming from previous year actually exists in the company now or not. Mean for above 3, we will add from previous year accounting records, but for existence, same physical inspection of the asset and their condition. Mean if we were the auditor in previous year, there is only one procedures, verify by comparing with previous year financial statements and working paper. But if we were not the auditor in previous year, then there are 6 procedures to verify opening balances. 2 for valuation, cost and depreciation, 1 for completeness, 1 for rights and obligation, and 1 for existence, altogether 6 procedures. Can you understand this? Is that? Examiner could ask, write down substantive procedure to verify opening balances of non-current asset. So you need to add from previous year accounting records and you need to write down first procedure as well. If he asks general procedures to verify non-current assets, we will write down these 5 procedures. Procedures, substantive procedure to verify non-current assets, simply format these. But here asked to verify opening balances of non-current assets, then we need to write down these 6 procedures. Examiner could ask, write down substantive procedure to verify addition of non-current asset. In the asset added during the year, bought during the year, we need to verify them. How we can verify? Just verify their assertions, valuation, completeness, rights and obligation, and existence. Same procedures, copy paste. These 5. But along with these 5, you need to write down one more procedures. What is that? The asset added during the year, we need to check their authorization. Authorization. Because if asset is authorized by top management, then it should be added to the financial statement. If it was not authorized and added to the financial statements, that it might be fictitious. First in a board meeting, management decide we need to buy this asset because buying asset is a huge capital expenditure. If it was not discussed in the meeting but added to the financial statements, this could be fictitious. So that's why we need to check its approval authorization for purchase as well. So check authorization or approval for purchase from where? By inspection of board minutes. What is my board minutes?
Things that happen in a board meeting.
The recording of management meetings. When management conducted the meeting, the recording of that meeting is called board minutes. We will inspect whether this asset buying was discussed in that meeting or not. And this was approved, this was authorized, so added, not fictitious.
So what about furniture?
Again, for furniture, everything. If it's a huge amount, we need to check its authorization. And then valuation cost by inspection of invoices and cash book. Depreciation recalculation using the rate and policy. Completeness, reconcile asset cost account with the asset register. Rights and obligation. Inspection of title deeds, purchase invoices and registry document. And existence, physical inspection of asset and their condition. Is that fine? So we have learned how to verify opening balances. If we were the auditor in previous year, there is only one procedure. If we were not the auditor in previous year, then there are 6 procedures. How to verify addition? There are 6 procedures. How to verify disposal of assets? Company cannot sell any asset without management approval authorization. Because if they are selling, what they will use them? So management decide in a meeting, okay, sell this asset and replace with the new one. So first we need to check authorization or approval for disposal by inspection of board minutes. Now we will move towards disposal account. From disposal account, we will verify cash receipt from cash book bank statement. We will verify elimination of depreciation from accumulated depreciation account, whether the amount is the same. And we need to recalculate gain or loss and make sure if it is significant, should be disclosed separately. So first, verify cash receipts. By comparing to cash book or bank statement if the money is coming directly to the bank. Verify elimination of depreciation by comparing to accumulated depreciation account. And for gain or loss, recalculate gain or loss on disposal of asset and ensure must be disclosed separately if significant. How we can verify presentation and disclosure? These are the 5 procedures we have already written out. So if we are going to conduct audit of non-current assets, we need to perform procedure under 4 heads. We need to verify opening balances. We need to verify addition. We need to verify disposal. And we need to verify presentation and disclosure. And this is all called audit program of non-current asset. Audit program of non-current assets. Examiner could ask separate, what are the procedure to verify disposal of asset? What are the procedure to verify addition of asset? Or he could ask general, write down substantive procedure to verify non-current assets, then general mean these 5 procedures. Whenever you are writing substantive procedure about any account balance, you can write one analytical procedure, compare current year balances with the previous year to investigate unexpected fluctuations. Along with this, we can also write analytical procedure. Compare.
That's for all type balance sheet.
Any kind of account balance. Compare current year balances with the previous year. Investigate unexpected fluctuations. Is that fine? Suppose we are having this question. Your firm has been auditor of a Hyde Manufacturing Limited for a number of years. Mean in previous year you were the auditor. And you have been asked to carry out the audit of non-current assets at the year end 31st December 2021. The company operates from its own freehold premises and the draft accounts show the following. Company non-current asset balance in balance sheet showing 2979. And its detail given below, there are 3 types of asset: land and building, plant and machinery, motor vehicle. Their cost account detail mean their opening balances for all 3 and total, addition during the year and total, and disposal is only of plant and machinery and motor vehicle. There is no disposal of land and building. And closing balance of cost account. So this is cost account detail. Now cumulative depreciation account detail, opening balances for all 3. Depreciation charge to P&L during the year for all 3. And those 2 assets who was disposed, plant and machinery and motor vehicle, their elimination of depreciation on disposal. Their closing balance. And this is the opening closing balance of cost account. This is the closing balance of cumulative depreciation account. This is the balance in the balance sheet. In cost as accumulated depreciation, net book value. What you need to do? List and describe the work you would perform in the audit of tangible non-current assets for the year ended. Mean what work you will perform? Mean what will be your audit program? It didn't ask you for write down substantive procedure to verify non-current asset. What work you will perform? What work you will perform? You will verify opening balances first. Checking figures brought forward from the previous year working paper and comparing to the last year financial statements. If last year's audit was not conducted, verify the assertion from previous year. How? Cost, depreciation, completeness, rights and obligation existence. For addition, first you need to obtain a schedule of addition. Mean list of addition categorized by these asset and see whether they have been included in the cost account. Authorization approval for purchase by reference to directors board minutes, and then verify valuation, completeness, ownership and existence. And for disposal, obtain a schedule of disposal, categorized by plant and machinery, motor vehicle, and compare with cost account. Check authorization from board minutes, and then cash proceed from cash book bank statement. Elimination of depreciation from accumulated depreciation account, and recomputation of gain or loss, and ensure if it is significant should be disclosed separately per IA sheet. And for presentation and disclosure, check presentation and disclosure, movement in cost account, accumulated depreciation account, and net book value. Can you understand this? How to verify non-current assets? What are the substantive procedures to verify non-current assets? What could be the other procedures to verify depreciation? Instead of recalculating depreciation using the rate and policy, consult independent expert to verify useful life of asset. Discuss with the management regarding their estimate, because useful life is estimate of useful life and depreciation rate. Why you are depreciating on this rate? Why you are assuming this life is this, to see if reasonable. Whether their discussion is on reasonable ground or they are just making guesses. If it is reasonable, that's fine. What else? Compare current year depreciation rate and policy with prior years financial statements for consistency. Whether in the previous year asset was used for these many years. If previous year asset was finished after 5 years, and now company is charging depreciation on 10%, mean 10 years life, this means there is issue. Compare depreciation rate and policy with other competitors in the industry. Financial statements for consistency. And there are 5 procedures to verify accumulated depreciation. Examiner could ask separately like that. So that's enough for today. We'll see you next week, next lecture on Friday. And we will cover some question on non-current assets and move towards other areas.
Friday, Mr. Malik said we have class. I told him we have audit. He said,
Okay, that's fine. We can change on Saturday.
okay.
Okay, sir.
The next class will be on Saturday.
Can you keep it on Friday earlier?
Not possible. They will be having 6 hours, 7 hours class then. So our next class will be on Saturday, 4 to 7.
Okay, sir.
Is that fine?
Yeah.
Saturday,
sir.
4 to 7. Is that fine?
Yes, sir.
Yes, sir.
Saturday 4 to 7, just realize you are preparing for ACCA paper, and ACCA is not a piece of cake that you can eat easily.
Earlier on Saturday's time.
To become an ACCA, you have to sacrifice so many things. You are going to become chartered certified accountant. And it's not that easy job. So we need to sacrifice our weekend. I am sacrificing for yourself. Otherwise, I can complete syllabus without these extra classes. So we'll be having class on Saturday 4 to 7. Everybody agree? Even if you do not agree, we will be having a class on Saturday 4 to 7. See you
Okay,
next
sir.
class.
Thank you, sir.
Thank
Inshallah.
you.
Good night.
Oh, thank you, sir.